And it's my great pleasure to welcome the first moderator, which is Daniel Wingen from UTXO Solutions. Daniel is a hardcore, I would say, cryptologist, experienced for many years. He's been shaping that ecosystem for a number of years in different roles. It's a great privilege to have him, and he put this panel together. Please welcome Daniel.
Thank you. Well, okay, before we start the panel, we thought it makes sense to set the stage a little bit because we talk about some topics like trust and blockchain and digital assets, and people always understand different kind of things when they hear these phrases. So the question is, how can you scale trust, and can you scale trust with blockchains? Do blockchains make sense in any of the trust problems? And we would like to look at two different kind of assets. So digital assets. So on the one side we have the financial assets, on the other side we have the corporate assets. So what does it mean? What is a financial asset? What is a corporate asset? I mean, financial asset, you can probably guess it's about like crypto and stuff like this. So we will definitely talk about CBDCs because we have two experts on CBDCs here. Is CBDC, does it need to be built on blockchain? Are there other solutions, maybe a better offer or better proposal for CBDCs? Then of course, financial digital assets as commodities. There's basically only one, which is Bitcoin, at least if you look at the regulatory environment in the US. And then of course, all kind of securities which can be put on the blockchain. Does it make sense? Does it not make sense? And of course, there are like 99% of the stuff which is on blockchain, pump and dump schemes. We will probably not talk about these crypto tokens today because it's just gambling and doesn't bring any value. So on the corporate asset side, so what does corporate asset mean? Corporate digital asset, in general, it's like, okay, everything an organization owns in a digital form to generate value. But we would like to focus, not exclusively, but mainly focus on process data and certificates which organizations own in a digital way. And there's also a trust issue with these digitalization of physical paper, so digitizing the paper trail. This comes with a trust challenge. So we have two trust challenges, one on the financial digital asset side and one on the corporate digital asset side. So on the financial digital asset side, the trust issue is the double spend problem, right? So can you just copy everything in the internet? This needs to be solved without an intermediary, or ideally should be solved without an intermediary. Currently, this problem is being solved through intermediaries by banks and all kind of trust entities. And on the corporate digital asset side, there's also the trust issue in terms of like, is the data manipulated? Was it changed? Who changed it? When was it changed? Is it still the original data, process data, or certificate which was issued by the issuer originally? So, and how can you scale trust here as well, maybe even on a global scale? So there are mainly different kind of trust issues on two different kind of digital assets we would like to look at, and then see, can we scale trust here somehow with blockchains? What might be a good solution to solve these trust questions? So, and therefore I would like to welcome the panelists. So first we have Mirko Valenti. He is blockchain scientist at SAP Innovation Center Network. Hi Mirko. He is researching blockchains and its transformative potential for solving the trust issue at SAP. And the main trust issue you're looking at is the cross-company exchange of data, process data mainly. So this will be very interesting to see your perspective on this. And you're analyzing blockchains for more than 5 years right now, right?
Yes, exactly. So thank you very much for the introduction, Daniel.
So next one is Tim Schuh-Johann. So Tim is
on test.
Yeah, Tim is also looking at the trust issue of corporate assets from a product side. So he is co-founder of Cryptar and working on the business development side. He's a database expert, so formerly director of partnerships for EMEA at MongoDB, and now looking on how can you solve the trust issue with data in databases in a more efficient and globally scalable way. And then we have Eugene Kim. Hello. She She is a well-experienced product manager, formerly working for Samsung on the enterprise mobility solutions, and now working with Giesecke and devrient to extend their CBDC offering on the product side. And then we have Jonas Groß, our last one on the panel. He is the chairman of the Digital Euro Association. He has a PhD in digital currencies and monetary policy. Interesting combination. And he is also the CEO of Etonic, a digital currency consultancy, and also one of the core members of the CBDC tracker. And you're also the host of a podcast called Bitcoin, Fiat, and Rock and Roll. So you do a lot, Jonas. You need to explain me how you balance your time. Great. So thank you very much. Sit down. Let's jump into the discussion. Maybe let's start with some deeper questions of what is the trust issue here, and maybe we start on the corporate asset side. And Mirko, I would like to start with you. Or how would you define the trust issue you are looking at and trying to solve?
Okay, the trust issue for digital assets can be thought of the need for a neutral table where frenemies or enemies can do transactions or business with each other. And these are typically called companies. So if you have two companies and they want to do business with each other, then they have some sort of digital financial assets and sort of money for sure. And on the other side, you often have certificates about who owns what. Yeah? So it's written down who's possessing something. This is written down usually and typically often on paper, because paper has some physical interesting properties. Yeah? So you have final settlement, whether you own the paper or you don't. So basically this is the basis or the competitor, the main competitor for digital assets. And but paper also does come with its disadvantages. So it's hard to transport it. So if I think about bill of lading, for example, so this is a transportation containering ownership piece of paper, which is then flew around with planes to change its place. And we all know about digitization. It's about getting rid this physical disadvantages, this bad properties. So and a lot of use cases failed today where trust in this paper can be exchanged by a digital form, because usually digital assets are stored somewhere, and you have the intermediary, and somebody has to hand over who owns what. And basically, this is the basic problem. Where do we come from? And we try to digitize the last pieces of paper which remain in our processes. And therefore, we look into blockchain, which could be this digital neutral table where enemies can write down facts, and they can trust into not getting betrayed by each other. So this is basically the
awesome. Before we go deeper into the definition of or into the solutions to solve this problem, maybe Tim, can you elaborate on how you see the trust issue on corporate assets? Because you talk to a lot of organizations about their trust problems.
Yeah. So I see essentially two aspects. One of them is, has data been manipulated? So is data still in the original form as it was intended? Because nowadays we're securing our data with digital signatures, but as we know, also identities can be stolen. And when we look at all the cyber attacks nowadays, we can't be sure that they didn't even steal certificates. We can't be sure that they're all just encrypting the data and trying it for ransom. The other part, when we not look at manipulating the data itself or having the data trustworthy, is the data real at all? because we're building a digital world on top of a physical world. And without bridging that gap, basically saying who confirms me that the data entered is actually the data the people claim that it is. And we have a lot of scenarios nowadays where we're building platforms, where we're building, say, big digital solutions, but if the data which is entered isn't being confirmed by somebody trusted, it's essentially built on quicksand. And yeah, and the same while we are talking a lot about AI at the moment. If you don't know through what data AI has been fed, and if you can't prove how it has been fed and what results have been the output of it, and you can't prove it independently, how are you going to win a case in front of a court or elsewhere in case something goes wrong? So that's where Harari talks about digital discrimination, which can be a massive topic at some point if it depends on your digital maturity, whether you can prove that you're right or somebody else has a better digital arguments, so to say.
Mm-hmm. And in terms of digital assets and manipulation of this data as digital assets, is it more a problem within an organization so that companies can't trust the data which is being generated and processed within the organization, or is it more like interoperability between organizations?
I think that depends very much on the scenario, because sometimes you have even within organizations different silos who don't fully trust each other. Let's even look at governments and different departments who have to align their processes, and they also need to prevent a blame game at some point. But also specifically when you talk about cross-organizational communication, data exchanges, that's where the real music starts. Mm-hmm. But from what I've seen so far, not many focus on the issue at core. They rather build a solution and then the rest will be fixed afterwards. But that's a bit my quicksand analogy in this context.
Okay, we will look deeper into corporate assets later, but let's move to the financial assets first, because there is also the trust issue existing. We know currently the trust issue is being solved through central banks and through consumer banks and all kind of corporates and organizations who work in the financial industry and offer payment solutions and so on. But is blockchain an alternative to these centralized trust anchors or trust solutions, or can you also solve the double spend problem in a different way? And what is the approach of the CBDC project you're working on?
Yeah, so as we are now talking about the financial asset perspective, I think we have to really focus on what are the main use cases, what are the main pain points we want to solve with this digitalized financial asset. And when I speak about the central bank digital currency, which is the public digital currency that we need to provide to all the citizens in the country, which it's not only excluded for the people who can use the digital payment, who has the internet access. Like, this should be truly inclusive public digital currency that everyone can use, even grandparents and then grandkids they can use. They can just make payment each other. In this regard, I don't think blockchain technology itself is not it should not be the core mandatory of this solution. That's the reason why we need to start from, as I think you also mentioned briefly before, we need to really start from what kind of pain points we want to solve with the central bank digital currency, and then we think about what are the best technologies that we can utilize. It can be based on the distributed ledger platform, or it can be just also the simple token-based, and then it doesn't have to be always on-chain. Because in the end, the user, they don't care if this is on-chain or off-chain. They just need to have some trust that this is not manipulated, and then they also have to trust that this money is really genuine money that I can store, and then, I don't know, in 1 year I can still use it. It's not something that you fluctuate based on some kind of investment in the speculation. It should be the stable means of payment that I can trust, and then I can always make payment everywhere and anytime. And yeah, so I think our topic is very diverse and broad, but I really want to get some insights from the different expertise here, and then I also want to discuss further about this. How do you see this approach?
Great. Jonas, would you describe the trust issue of financial assets, and how do you see CBDCs solving this, or maybe not solving this, or how CBDCs are approaching this?
Yeah, I think there are kind of two angles to that, or two things I can add. And in terms of CBDC, I think what you just said makes fully sense to really focus on the problem you want to solve. And here, I mean, for Europe, for example, I'm not sure if this focus is crystal clear yet. So it's kind of, for me, a kind of backwards engineering and the question of which problem to solve from a user perspective. And that's like really what I say, not the central bank, but the user perspective is something that is missing. And I think it should really be a pragmatic approach to define what do you want to achieve, what are the goals in this regard, and then just test different technologies, right? So maybe test a permissionless DLT, a permissioned DLT, centralized alternatives, hardware-based solutions as you develop, and then you can see what the best fit is. Because if we look into the CBDC space today, and there are a few CBDCs live and pilot, there is, wouldn't say like a 50-50, but a lot of them are based on DLT, but not the kind of Bitcoin permissionless systems, but more the permission system, what you also, Mirko, talk about. And I think for some countries, this makes a lot of sense. If you think about, you know, island nations, lots of hurricanes, natural disasters, where you kind of need redundancy in some way from a database perspective, I think there is a use case, but that shouldn't be the first question. That should be like one question, kind of, wouldn't say in the end, but within the process. And the second angle, and I think that's very important, also what Tim said and what Mirko said, is really about, you know, these efficiency gains you can achieve. So first, for this use cases on where different companies work on, what would be great for this, Mirko, to go a little bit deeper there, because I always like to play the devil's advocate, because we have seen lots of use cases failing between different companies. So, but that's probably something for later. But another gain is really, in this regard, getting rid of intermediaries. And here, as we talk about financial assets, if we think about the issuance of a stock of a bond today, and you had, until a few years ago, you talked about the paper, Mirko, is really, you had a paper requirement for digital assets, right? So it was somewhere stored in a safe, and which is, you know, from a digitization perspective, wouldn't say insane, but I think we are one step further. And this is why I do see lots of use cases for these digital asset side, like tokenized securities, tokenized stocks in the long term, because here you can get rid of a lot of intermediaries. And if this is like a permissioned less or a permissioned infrastructure, I think that's something we can also discuss during the panel.
Maybe one additional question here. If we look at the trust problem for financial digital assets, and specifically on CBDCs, is this really a problem? Is this problem existing? Because if a CBDC is being issued by a central entity, in this case a central bank, which like CBDCs are typically being issued by, is there a trust issue even existing?
Great question. I think for this question you will get here 5 different answers from the panel. And I mean, I know
maybe you start.
yeah. And I know your background, so I think I can pretty well guess what you talk about. And I mean, that's also something I had in mind. What does trust, again, in this regard mean? So if you don't trust a central bank at all, I think you shouldn't use a CBDC, maybe also not use cash, if this is like your perspective, right? But this
probably depends on if the CBDC is also possible to transfer without a middleman, right? So there are ways of, like a central entity could issue it, but you could also like make the transfer in a way that no intermediary is necessary.
Exactly, yeah. And I mean, for the CBDC case, that's not, you know, that the central bank sits down and say, we need to establish trust, this is why we issue a CBDC. So from a central bank side, this trust is given because you say, as central bank money, you trust into this form of money because it's less risky than, for example, the money we have today on the commercial bank money side. So that's definitely not the key pain point, and also not why central bank look into DLT, because the central bank says, we want to get a form of money which is, where you don't need to trust us. So that's just not the use case. That's maybe a use case for Bitcoin or other such assets, but not the main pain point for the central bank.
Eugene, you also wanted to add something?
Yeah, I just wanted to mention about the trust part. So maybe it's not that much of issue for the payment or as the storage of the medium, but I think when it comes to the currency, many people have some issue with this privacy. So when they make the cash payment, they don't have to worry that their data is leaked somewhere. Their data, private data, can be transferred to I don't know, some kind of entity. But when now it's going to be digitalized, of course, many people are worried that they might say, okay, what if ECB is tracking my transactions, and then they are using some other ways. But that's the main point, that when central bank wants to build the central bank digital currency, they have to really make sure that they will not violate any, or they will not overrule any private information or private standard they want to provide to their citizens. And then they also have to gain this kind of trust from the public, that digital currency doesn't mean that we will collect all the data from the general public. This is for the efficiency, and then to give more space for the digital innovation on top of the public currency. Because if you only have the cash, and if you just separate the world, that digitalized world where everything can happen with the digitalized asset and the digitalized investment, and then still if the public currency is based on the cash payment, and then if you have to wait one day to get the bank transfer, and then I think it doesn't make sense. So central bank, that's the reason why they want to transform in this way, that they want to invest more money to really to be in this kind of journey in the digitalization in the private sector. And then I think that's the key point of the central bank digital currency.
Okay, so trust, we can basically summarize the trust issue for not trusting someone with a CBDC is not really existing, because in CBDCs there's always a central entity issuing the tokens or issuing the money, and also a central entity somehow maintaining the infrastructure to get the throughput on this system through to everyone in the area the CBDC is valid for. But if we look at the corporate assets now, the corporate digital assets, how's the trust issue solved here when you transform the analog paper trail into a digital paper trail? And I mean, analog paper trail is kind of solving the trust issue in a way that it's really hard to manipulate physical paper, or it's harder to manipulate physical data, specifically if there are some stamps on it and some solutions on it, which makes changes a little bit harder. But is there a way how currently organizations are digitizing their processes and their paper trails with an intermediary?
Yes, I think so. In B2B, we're usually always working with some sort of intermediary. If we look at the TIC industry, testing, inspection, and certification industry, that's essentially what they do. Yeah. They build a connection between the real world, the physical, and issuing those certificates that those products are actually what they claim to be. And that's also a little bit the thing when we talk about intermediaries and the purpose of blockchain. When we look at B2B, we always need to understand that the organization won't engage if they don't know very precisely who's responsible. Because you need somebody to blame if something goes wrong. You need somebody to sue if your business is being impacted. And if you say, yeah, we have this system running there and it's going to solve everything for us because we've written contracts into it and it's going to be fine. Yeah, well, the moment first time something goes wrong, then the blame game is going to start. And how can any court make a fair judgment on that basis? And that's why I think the role of intermediaries is ignored way too much in the B2B context, because either two parties trust one another, they can build something together, they can do a lot of things together, but if they don't trust one another, they need somebody else whom they can hold accountable for if something goes wrong.
Do you see some more involvement of notaries in the enterprise sector to help make sure that data and contracts are not manipulated when they are in a digital form? I mean, notaries are basically like a time witness for physical contracts. You could also think about a digital notary for time stamping and being basically a time witness for digital content, right? But this can also be done by an intermediary who is stamping the documents kind of as a notary.
Yeah, and there are offerings for that, for sure. So we have services who are doing exactly that. They're saying, hey, this document is from that time, from that person, and giving it authenticity and genuinity. So, but therefore, if you think on a global scale between countries like China, USA, Russia, you know the tensions which are in the world right now, then they will look into these intermediaries. Where are they based? Are they US intermediaries or Chinese intermediaries? Would you, should we put our certificates on Alibaba Cloud? Yeah, you're laughing, but this is a genuine question. But they are asking themselves the same question. So, and this is why we are, as Europeans, are looking to build an independent, US independent data storage. So we don't have to trust to this side. So as you can see on a global scale, there's always this trust problem, and you will always have specific use cases when it's about a lot of money, where you do not want to trust some intermediary because they are never neutral. Once there is a name on the ringing bell, and you can go there under the door, knock there, hey, we have some personal interest. This person is gaining some benefit. Please stop him from gaining that benefit. Then this will happen when extreme situations occur. 2 years ago, it was harder to imagine situations like this. But now, with the recent stuff, what happened in the last 2 years, people can now more understand or imagine, okay, this can really happen. Even the SWIFT system, which can be disabled. Yeah? If you would tell this to people 2 years ago, there would be less imagination than now, because now it happened already. So this is a big difference. So you have these trust issues always, and you will always have people who then want to decide for paper properties or paper qualities, physical properties, with final settlement without another intermediary. You for sure remain the Oracle problem, who's writing down what, and we have a debt relation, and yeah, that's also the case. But if you think about that, a digital neutrality is not given by simply an intermediary who is based in Florida and offering some signing and timestamping service. That's, for specific use cases, not enough.
Yeah, I think this is a good point to move over to the scalability of trust. I think there are kind of two ways how you can look at scalability of trust. On the one side is the scalability on a geographical level, as you mentioned, like who can actually trust the anchoring of the asset, right? So who can trust it? Who is going to trust it? But on the other hand, we have also the problem: how much anchoring can we do in this? Like, what is the throughput? Can we scale the trust on a throughput level? But let's maybe look at scaling trust from a geographical level. Do organizations, Tim, the organizations you're talking to, are they aware, or do they have this problem actually, trusting on a global scale and not being able to go to one intermediary, or is this a problem which is just coming up while the paper processes are digitized?
I think the problem is going to grow as we digitalize more and as we collaborate more in the digital world. I think today we are still talking a lot about bilateral relationships which have been built over time, where a manufacturer is working with a supplier. They've built a high level of trust, and if they start with somebody new, it's going to be a new high level of trust which they are going to drill down into. And also, when we look at collaboration at a bigger scale, we're not talking about platforms, but to be honest, that's bilateral interaction with a platform that's offering a service. So we're not in this multilateral kind of world yet, but the more we grow into it, the more that will become a problem. And at the moment, we're still operating in silos. And you can see that very good with the trust service providers. Like in every country, every region are different trust service providers. And similarly to the central bank, their trust doesn't scale beyond their community. Like everybody who trusted them before will continue to trust them unless they screw something up. But somebody else won't now join and say, oh, they've built a great technology, now we're going to trust these guys. So essentially, the way I see things developing in the future is more like the SSL, TLS principle, where you have different trust service providers from different regions who hold one another accountable for publishing the right information and in that way also doing, say, checks. So if someone, like today, if somebody would publish a wrong PKI blacklist, immediately he would lose credibility in the industry because he's being checked by all the competition. And I think that's the only way how we will be able to build global trust, because everything else would imply that all trust service providers sit together and say, hey, this is how we're going to do this, and I've the same interest here locally as you do, and we're all going to build this global network. Well, guess what? We don't have a world government for some reason, and why do we think this is going to work differently in the digital world?
This pays greatly into my next question, which should have been, or maybe also make it a little bit more controversial. But on a CBDC level, right? So we don't really have this trust issue as we just discussed, or like on a different level. But scaling CBDCs on to the whole globe is basically, if I look at CBDCs and how trust works here, that you have a central entity issuing and maintaining the system, you basically need a world government, like running a global CBDC, if you want to make trust available on a global scale with an intermediary, right?
Yeah, so I guess this question goes back again to this, like, which problem do you want to solve and which use case do you have? So it's all coming back to this, you see, because currently, for example, for a lot of central banks, they are considering mainly domestic payment use cases. So it's an alternative payment method. We could go to the restaurant, I could send you afterwards for a beer we drink later, just a normal alternative payment method. But of course, where currently lots of inefficiencies is like cross-border payments. Right.
Yeah, I mean, even the BRICS states are looking into how they can settle between
exactly how they unite
CBDCs
and how they unite each other to have like kind of a counterpart in this regard. So cross-border payments are still, it's always a story, but it's true. It's very expensive. It takes often lots of days. They are typically also, and that's like the reason, different data formats for the shares, different AML, KYC standards. So it's not just, if you bring all on a blockchain, it's everything solved. Definitely not. But if you could agree on a decentralized database for these different countries, of course, that would be a really big value add in terms of these cross-border payments in this regard. But this also implies how I'm saying that who is the referee, right? So we don't have the world governments, and we have parties like the Bank for International Settlements, the IMF, who are doing lots of research in this regard to, kind of set up these infrastructures. But again, and then here trust comes in, right? Then the other country needs to support the other. And again, here benefits could be to just use open source tech stack, which we today have from lots of these, unlimited permissionless blockchain infrastructures. But unfortunately, that's not what's going to happen.
But you also need the trust network first. You need to scale trust even with open source.
Exactly.
You build a network first.
Exactly. That's what you need. And I mean, in the end, it comes all back to the permission networks. And here it really just remains to be seen if it's viable to set it up. Who is the referee? How large are the efficiency gains ultimately really? And currently lots of pilots are going on which promise you, the best and cut on cost. But if this is really happening, really in this regard remains to be seen. And ultimately, and I think this also goes back what you were saying, Daniel, there is from a central bank side the trust is not like an issue. They see, we need to establish trust because they assume if people use this and it's optional, they use it. And if they don't want to use it, they use something else, fine. But where you need trust in the CBDC debate is the trust from the people that you want to use this, so that, for example, hey, if the central bank says, and you talked about privacy before, it's private, that it really is private, or that no data are collected, or, that maybe some rules are not going to change. And this is trust you need, and this is like if you think about it, that's massive, because in the end users use it, and if you don't have the trust in that, nobody will use it and it will flop.
Yeah.
So this is why I would say there is also a trust element in CBDC, but more from the users towards the central bank, and not from the central bank, trying to pitch for establishing trust.
I mean, the good thing is the central bank digital currencies is typically, its value is not defined by the market. So even if just a few acceptance, or a few companies accept the CBDC, it's not bad for the holder of the CBDC because it doesn't decline in value. But if you have a financial asset which price is defined through the market and you can't grow the network, and the network isn't growing, then of course you might have a problem. And I don't think it's trust in this way, but we can discuss this. Maybe it's more about educated guess, which kind of network for trust and scaling trust for financial assets.
Yeah, but totally, and I mean it's also a lot about education and convincing the people. And actually, we have seen, and I'm sure not a lot of people know that, but there have been CBDC projects in the past that, I mean, a few years and even decades ago. So Finland had this around the time where credit cards emerged, like 25, 30 years ago. It was there. It was just cancelled because people didn't use it. It was too expensive. UX was horrible. So it was just cancelled. The same with Ecuador, like 5 to 10 years ago. So again, there needs to be some conviction that this is like something the public wants to use, and this is also what we often mention when we talk to central banks. Again, which problem are you solving? And then you need to think about how to design it in a way that in the end, then it convinces also the people that you use it. I mean, not everybody needs to use it. It's an option, right? It's another payment option, but you need to convince some people that it's worth using it, because otherwise it's just a lot of money spent for not a lot.
Eugene, do you see that the trust problem is being discussed at the central banks you're talking to, or and how do they deal with that? Do they use CBDCs to increase trust into their entities, or what is the approach here?
Yeah, I think most of the central banks, I think there are some exceptions. Some central bank, they don't care so much about the user adoption, or they don't care so much about the user trust. But most of the central bank, especially also from the European Central Bank, they really care about the trust, because if they, of course it's based on the people's decision, but if they don't adopt it, if they don't use it, I think this whole investment, they want to change the infrastructure, whole investment will not be so successful, and it's not fruitful for them. So they want to make sure that people trust this digital euro that will be published, and then they want to gain attention and traction on this kind of payment as well. So the trust is still very critical part of the CBDC, but when it comes to the cross-border payment, I think the trust issue is not so much problem of the individual, it's more of the trust issue between the central bank. So each central bank will probably provide their own technology, and then, for example, if China wants to make the cross-border payment with I don't know, American citizens, I think it's more of the trust of the government itself. They should trust the technology that the Chinese bank are providing, and I'm pretty sure this will not be an easy discussion. And I, from my previous corporate experience, I also had a similar problem also in regards to the digital asset. So as a Korean company, we had to deal with the Chinese company and then also the US American company. And when we wanted to make a contract, we had a US company, like the technology provider, who also give this kind of blockchain-based certificate. And then, of course, our customer from China, they say, no, we don't want to use the American-based technology provider. So this is something that we really need to think about it. Like, this global trust is also something that we can really solve from this blockchain technology, because there is no single entity in one country that we can trust if they provide this kind of secure process. And you also talk about that the European company also needs to find the European intermediaries, which is also like just getting this discussion worse and worse. Like, okay, like then every country will build their own trusted entity, then it will not solve the problem that we want to have a global trusted way, or the solution that we can really make this process, and then we gain the trust from everyone. Yeah.
Okay. Before we look into what makes a good global trust anchor, or what does require a good global trust anchor, we also have the problem of scaling trust in terms of throughput, right? So we discussed this before the panel a lot, that a CBDC on blockchain typically has a throughput problem, right? So blockchain is not really, I mean, it's also not really a solution for solving the trust issue, because there is not really a trust issue as we recognize. So does blockchain make sense at all for CBDCs? Are there like problems which can be solved with blockchain?
I see some areas that we can solve the pain points with the blockchain base. As I mentioned, the data part can be an issue for some segments of the people, and then they also want to make sure their data is not manipulated by some trusted entity. Even the central bank or the bank, they get this CBDC wallet. So for this kind of use case, I think the blockchain can be also very useful technology. And also when it comes to the wholesale CBDC, the throughput, the performance, the scalability is not so much issue. And then they also don't want to trust one entity. So I think in this sense, I think the blockchain technology could make sense. But the retail CBDC, for the usual payment that you go to a merchant and then you want to buy something with CBDC, I think the blockchain technology doesn't make sense. Why we need to use the blockchain? Yeah.
But problem in this, the problem or the solution with blockchain is for the problem that maybe even within a central bank, there are multiple stakeholders, and you don't want to trust one stakeholder or two admins, but you want to like distribute the trust at as many entities within your organization as possible, right? Or this is probably the reason why central banks think about blockchain at all, right? Okay.
Or they just think that blockchain is cool, and then they have to use the blockchain technology for when they build a new solution.
But I think that's a fair statement, because I've heard that, say, mental shortcut a lot, where we're not sure if we can trust the database, so let's use a blockchain, which is like, yeah, well, if it's running in your basement, it didn't change anything, and if you have 6 servers somewhere around the world, it doesn't really change anything either, right? So it really depends.
Yes, if you have different server administrators and they don't talk to each other, maybe you can have some improvements here.
Yeah.
Maybe to comment on that, and I'm surprised that actually I'm kind of the blockchain. I wouldn't say proponent in this regard, but I would question a little that there is really like no use case for it, because I think again it depends of course on the goal, on the geography. But the example made before, if you have a jurisdiction where you have natural disasters, where you basically, and this is some countries, they just have a few banks, and where you need basically like parties that, I mean, that's what a blockchain is, where they have writing access to a database. That's like what a blockchain is. Then I think it makes sense, but that's particularly like smaller jurisdictions and not, in Europe. But I personally wouldn't rule it out. I would say, that's the goal, try it out and then see. But where I would agree is that probably in most of the cases, it's not the preferred technology.
Awesome. So we have 10 minutes left, and I would like to have some questions from the audience as well. But before we do this, maybe one last round. How do you think this problem of scaling trust on a global level can be solved, and how should a solution look like? Maybe Mirko?
Yeah, in a globalized world where we do not have this world government, which you mentioned before, we need some digital neutral table where enemies can sit and do not have to trust each other and do transactions with each other, or having the assets on this table and be sure the rules of this table are not getting changed next year, or the assets are getting frozen or taken away, or my ability to transfer those assets to the other side is getting limited. So, and if you think about in a big global scale, then CBDCs or centralized solutions, I think, won't be enough, because you always have to think about, if you sit Russia, USA, and China on a table, if this table is trustworthy for all 3 of them, then that's a good table. And this should be the quality check which you should doing when elaborating on a digital asset.
So a table which is independent
as a blockchain.
What do you mean, a table independent from any government, anything?
Yes.
Like?
I mean, yeah.
Okay, cool.
Because otherwise they wouldn't trust this table. So, what is this one table? Does it exist? And if it's there, how can we use it? So this is the for me the big question.
Tim?
Yeah, I think we're gonna have a lot of trust bubbles appearing, which will also be able to scale to a certain degree and potentially even integrate with one another. I'm not a big believer that we're gonna all find a common standard, how it's gonna be evolved, because it will be still local standards with local preferences. However, I think we need to look, or at least we always look at blockchain from two perspectives. The one is blockchain cryptography, and the other one is blockchain infrastructure. And on the blockchain cryptography level alone, you can do a lot in terms of functionality, you can do a lot of assurances, but then again, it depends where you get trust, because cryptography itself doesn't bring you the infrastructure trust, which blockchain typically promises. And then again, we're back to intermediaries, we're back to authorities, but also back to public blockchains. Okay, Ethereum basically ruled itself out a little bit when they started to enforce American regulation. However, there's still the Bitcoin blockchain, which is also not trusted by all countries at the moment. So we will see how it evolves as a global standard maybe. But it won't be this one solution for all. And that's why I do believe we will have cryptographic notaries, which give us assurance that data is valid, that it's actual, and that an intermediary whom we can sue in the worst case confirms information to us. And then I see a similar scenario, as I said, with PKI, SSL, where essentially countries will have to hold one another accountable. But I don't see a complex solution as that, because the more complexity you introduce, the lower the opportunity for everybody to participate as equals. And that's the human factor if we want to collaborate even in the digital world.
Do you think that like CBDCs actually can be scaled on a global level without a world government or like a consortium of central banks, or is there also like a different kind of solution you have in mind for this trust issue?
That's a very hard question.
Yeah, I know. Sorry.
to ask me. I hope I can answer the question. That's also the question that I've been asking to different central bankers. And what I see, the most important thing is that I think we need to come together, and then we really have to openly communicate what each country wants to achieve from the CBDC. And then I want to bring this standard terminology again. So I see that like this, when we issue the central bank from different currencies, different country, I think this kind of global standard is really, really essential to make sure that we have all same language to communicate. So it doesn't have to be same technology, but we should have a common standard, common global standard that we can actually start as the baseline, we can start the communication. And I want to take this example of the GDPR. I know it was really like pain in the ass in the beginning, like when they first introduced this GDPR standard. But in the end, like when we talk about the data protection, when we talk about the privacy, I think still like all different entities in the European country, they talk in the same language. I see that this should be also happen in the CBDC world. So they should make alignment on this common standard, like which level of the security, which level of privacy, which level of, I don't know, innovation we want to achieve together. And then we start from the standard for the different use cases. That's the solution that I see that we need.
Jonas, what's your solution?
What's my solution for what? For the world government, for trust, for...
One alternative to the world government?
Fix it now. Yeah, no, I think, you know, really what has been said, I think there is really not a lot to add. What I just really liked is also, Mirko, the response you gave. And I think, you know, if somebody found this chair you talked about, please let me know, because it's really challenging to find this exact chair. And I think, you know, maybe one thing would like to share last is really also as a company, if you look into this topics of, you know, using blockchain to solve specific issues or trust issue, of course, define which problem are you solving, not just use it because it sounds cool. And I guess most companies do this now, but still some of them don't. And also look at permissionless infrastructure. So they see this around, digital assets, be it Polygon or others, that this is more and more used in permission systems. So from my position, the permissioned use cases did not fully prove out that yet. So I think this is a tendency I'm observing, and yeah, I think this is also the way forward in space.
Great. So we have a few minutes left.
Two.
Yeah, we can maybe do a little longer if there are more questions. But are there any questions in the room?
Please state your name and affiliation. Thank you.
Yeah, hi, I'm Kai. I'm with Twins Foundation. We're building Web3 digital identity, so it resonates very well. I talk a lot about digital trust, so very good discussion, a lot of points that resonated with me. Quick question, on the solution for digital trust, how is the proportion of governance, strategy, politics versus actual technology, I mean code? Any answer on that one?
I already answered before, right? So I see this governance part is should be higher than bigger than this actual technology part. So it should be around 60 and 40. But sometimes people are really ignoring this part, and then they focus on the technology. They only talk about this 70, 80%, and then they say, okay, maybe we need some governance in the 20, 30%.
Yeah, I would also say never forget the real world. Because if we talk about digital, now we're suddenly discussing how great features and functions can somehow turn the world around. But if it doesn't work in the real world with some comparison, and I often see that also from the blockchain community, if there's one, so to say, people didn't understand it well enough. No, you didn't understand the problem of the people well enough. It's the other way around. It's not the user's problem that they don't see your use case. It's your problem that you don't see the user's use case. And typically, and that's why I would say the code and the technology bit is a tiny piece. Because as we always said, it's people, processes, and then only tools. And if you don't have the first two aligned, what do you want to do with your technology?
Yeah, it pays also in the question we had earlier, is there trust in is central bank digital currencies actually being used, and by how many people? And the problem here with the price is not really existing, but if you have open permissionless networks where everybody can participate, of course the success of the network and the trust scale it can reach depends on how many people are actually joining it and not on the technology.
Hi, my name is Martin Weber from T-Systems. I have actually two questions. So in my time in 2019, I worked for Siemens Financial Services, and we did a blockchain use case in the insurance segment. And here we did a community-based model. So the blockchain for us was just as a technology, but the main thing in our use case was the community. And here we founded a community which had a common purpose, and that we used to address exactly the trust topic. And so my question to you would be, do you think a common purpose of a community could be beneficial to address the trust topic? And shall I do my
Let's start maybe with the first one. I think it pays also in this direction, the question you just asked. Does someone want to answer it?
I think that depends very, very much on the community. Because if you have an operator of the blockchain, that operator must be trusted. And if you're T-Systems, okay, you have a good trust level in Germany, but if not everybody from that community has the skills and knowledge to be a full member in terms of understanding what are the decisions that are being made within this network, understanding what are the implications for me personally. If they don't have that knowledge, they have to outsource that knowledge, and they have to trust that other person who has that knowledge. And that's why I'm saying we have to start with the people. If they're all tech savvy and they all know how to run their node, fine, cool, and the community will probably scale. However, most use cases are addressed at the, say, standard user who's not running a node, who cannot code, who cannot interpret code. So he has to trust the person who provides that service. Yep. And that's also why I sometimes think blockchain as a service offerings are a bit of a joke. Depends on the context, because you have to trust that service provider, and he's providing a service to you. You're paying for a service, and you're going to sue him if he's not providing that service. That's our time gone, I believe.
No. But I think we have time for the second question as well. Maybe to add some ideas here. I think the community is super important, right? But as Tim mentioned, it's not only like community members who are like quickly using it or looking into it, but the community members who actually want to be co-owners and steer it. But they also need to have the interest in understanding and learning and also executing this. And this takes time. And what is the incentive to do this, right? Be part of something. Be part of something bigger, and bigger as yourself is also a motivation to do this and also to solve problems in real world, right? So the question is, what is the kind of network which drives a lot of adoption, brings a lot of people together just by incentivizing them being part of something bigger and changing the world to a better way, right? I mean, of course, what I'm leading to is Bitcoin, obviously. But this is like a good example of how a community did grow and is still growing like crazy, right? And so many node runners and more node runners coming into the network every day.
One small take from my side. So incentives, this is the word which have you mentioned right now. This is one of the most important things. You have the technology, you have the politics, governance, and so on. You can have, I mean, a lot of private blockchain networks started and failed because they had no functional incentive systems. And incentive systems are very important. And if you think about why blockchains like Bitcoin, Ethereum, whatever are working, then because they have, for sure, a tech which makes sense, the governance makes sense, but they have a running incentive system. This is very important and often forgotten when designing systems like this. And yeah, that's
good point.
Yeah, and it shouldn't be snowball-based, right? The incentive system cannot be in the intrinsic value which is growing through the community, because that's a story every new token discussion will convince you why it's so great. But yeah, let's see.
Yes, so I agree on that, and especially on the incentive part. So we also addressed that in our use case. Where I don't agree is that blockchain as platform as a service thing with that one you have to trust, but maybe we can have a talk afterwards on that. So we addressed that as well. But coming to the second question, so I think 2019 blockchain was on the top of the hype cycle. Currently it's a little bit normal, let's put it like that. The place was replaced by AI now, which is on top of the hype cycle. So, but the amount of real blockchain major use cases, especially in the business context, at least I would say is not really reached. So maybe it was too early. So do you think it will become back to the spotlight again? So maybe when the noise on AI a little bit goes down again? What is your view on that?
Yeah.
Okay, a short take from my side. So this blockchain use cases depends a lot of the budget which is being spent on blockchain use cases, researching that and so on. And right now the budget is for sure allocated to AI use cases, as you mentioned. And the interest will come back. Usually it is correlated with the price of Bitcoin. It's like it is. The crypto market follows the Bitcoin price, and if the Bitcoin price will rise again, the interest will rise as well for these use cases. And yeah, there is for sure a lot of investigation to be done still into how can you use this decentralized database otherwise than money, because money is right now it's the wrong timing for money, because if banks are not using money, the industries will for sure not. So first,
money on the blockchain, you mean?
Yeah. So banks have to start first. They have to do their first move to legitimize blockchain money. Yeah? And then industries will follow. So in this meantime, the industries will have to look for this second use cases, which are much harder to detect. I mean,
and the problem is maybe also not so visible yet, because we are still in the process of digitalizing the paper trails, right?
Yes, exactly. So this patience is the key here. So yeah.
And maybe just one comment on that. So I think a great use case is really just having digital assets as a new form of asset. So basically thinking about Bitcoin, I think that's for me personally kind of a game changer use case, which is there, but not yet in the B2B context, I guess, more in the retail one. And in the business context, I really see tokenization as a really important use case, and here primarily financial assets. So what I mentioned before on bringing debt obligations on chain, bringing equity on chain, securities, that's currently ongoing. It takes a while, regulation, all these processes, paper requirement, but it's getting more and more. And I think this will be really a key trend for the next years.
I also think you're right in your analysis, so to say, because even when you look at the latest Coinbase report, which came out, where they said, hey, 50% of the largest companies are engaging in blockchain or in crypto or whatever, I'm pretty sure more than half of those projects are marketing blah blah, where they're trying to make a point, where they're trying to show proof innovation. It's a little bit like big data in the past. Everybody does big data and then they don't know what to do with it. But then from that, true use cases will emerge more and more. And I hope this whole crypto thing, which we're seeing at the moment, is a little bit like the .com bubble, where you see there are individual players who have to add true value and value will prevail. But those who are trying to create value out of thin air, they're going to disappear. And that's why this whole process at the moment is very healthy. But not everything that shines is gold. So,
perfect final words. Thank you so much, everyone. This was a great discussion. I hope you get some value out of the discussion, and I wish you a great day.